Good afternoon, guys. Good afternoon. Good evening. How are you? I trust you're all doing very, very well. I trust you all had a great day. We had a great day today. We had a great day. I trust you all had a profitable day. So let us continue then. So today I wanted to talk about demand and supply. Right? I wanted to talk about demand and supply. Uh, a lot of people, they are confused about this topic. How to draw this demand and supply, how to draw these demand zones and the supply zones. What do they mean actually, right? What do we mean by this zone? Why do we call them a demand zone? Why do we call them supply zones? What do we mean by these zones? Okay, so a supply zone, right? A supply zone. Okay, let me start like this, right? As we know that the market, right, is not controlled by us as retail traders, right? We don't control the market. So there are these high players of the market who control the movement of the market and stuff, right? So they thought their target, right, where they want to buy and where they want to sell. So because they are humans, right? Humans are predictable, right? Humans are predictable. That okay, if you set your your stop order here at that level, there is a high probability that you can set your your stop order on that level in future again. So there's that what high probability. So same thing applies to what to supply zones, right? We know that we've got these high investors of the market, right? The banks, the institutional traders, right? We've got the hedge funds, right? The fund managers. So we've got those people. They control the market. They trade with high amount, right? They trade with big amount of money, right? So once they take a trade, they control what the market. They control the market. So now we want to assume that if these if these traders have taken maybe their buy signal, where do they want to sell? So we'll go to our previous market movement and check where there was an aggressive drop in price. Where there was an aggressive drop in price. So once you see that aggressive drop in price, you do what? You just you do what? You select that zone, then you extend it. Right? You draw your zone and you extend it. What do you mean by this supply zone? So you find the supply zone where after the consolidation in an uptrend, right? Where there was a previous strong drop in price. So you draw that zone together with the consolidation, then you extend it. I'll show you. I'll show you that. Don't worry. I'm just summarizing. Then you extend it, right? You extend it. What do you mean by extending? You mean that okay, since there was a strong sale on that level, so now I expect my what? I expect these market influencers, these high market influencers to what? To set their sell orders somewhere around this zone. That is why we draw it as a zone, because there's no exact price that okay it will be this price exactly. There's no exact price, but we draw this zone that around here. This is where we expect our what? This is where we expect these high market influencers to what? To set their what? They are sell what? They are sell orders or they are short signals. That will depend. So on that level, we want to what? We want to sell. How do you see what a supply zone? You want to connect from the what? From your previous what? Your previous strong drop in price. Then you connect that. Same thing applies on what? On the demand zone. Same thing applies on the demand zone. So when it comes to the demand zone, this is where they want to buy. Right? This is where they want to buy. This way you see what? The strong rallying price. That where there was what? Where was a strong rallying price? This is where you want to what? This is where you want to take your buy signal. Not because you will control the market, but because you assume that these people, these high market influencers, this is where they take their buy entries. Okay, so you'll find that on your demand zones, right? On your demand zones, where you want to buy, you find that maybe they are posting some their good news about what, maybe about Doge, but you find that this Doge, it was about to reach the demand zones. So the fundamentals, they work in your in your favor, right? So this way these high market influencers, this way they have this way they've said they are buy orders. So this way they want to buy. Okay, this way they want to buy. Okay, here's is our example, right? I'll just try to be as quick as possible. So here is our example, right? Here is our example. So try to, okay. So you can see that from this level here, from that level, this level here, we had the beginning of a strong rallying price, right? The market, it moved up, right? It was a strong rallying price, Then once you see that, right? Once you see that this strong rallying price, right? The market is already up to this level. So once you see that, what do? Once you see that, instead of you chasing the market, you don't chase the market, you just draw this zone here and extend it, right? And extend it, right? You draw it and extend it. Okay, then from here you had a strong drop in price, right? There was a strong drop in price. The market had a strong drop in price. So instead of you trying to chase the market, you just take this area and draw your your supply zone. Okay, just take this area and draw your supply zone. All right. So what do you mean by supply zone is that you're expecting that from from this level, right? From this level, what do you expect? You expect the market to actually come back to to your supply zone. Then this is where you want to take your short signals, right? You want to take your short signals. And look what happened here. From this point, the market starts buying, right? So you take your buy entry. You take your buy entry, and your target will be It will be somewhere close to to your supply zone. So that would be your target, somewhere close there to your supply zone. Then once you reach your supply zone, let's say maybe you want to short again. So you know that from this level, I expect the market to go down. So you want to short from this level. So you take your short entry on this level, back to your demand zone. So the demand zone will be it will be your target profit. Okay, same thing applies here. You take your buy entry. You can see consolidated, testing your feelings, your emotions and stuff. So it continued to going up. Then it respected your supply zone. Then that's why you want to take your profit. So what do I mean by this? What do I mean by this is that you don't have to chase the market, right? You don't have to chase the market. What you have to do, once you see a strong drop in price, like here, there was a strong drop in price. Once you see a strong drop in price, you just go to that zone, the beginning of a strong drop in price, you draw it, right? You just draw your zone. Right? Then what do you mean by this zone is that I'm expecting this market to come back to this zone. Then once it's come back to this zone, this is where I want to take my buy entry. This is where I want to. I mean, in this case, it is a supply zone. So this is where I want to short. Okay. So now, also on the demand zone, right? On the demand zone, instead of you chasing the market, you just draw this zone and extend it. So what do you do? What do you mean? You mean that, okay, I've seen there was strong in price. So instead of me chasing the market, I just choose to wait, right? I want to wait for this market to come back to my demand zone. So when it comes to my demand zone, this is where I want to This is where I want to buy, because it means that these high market influencers, these hedge funds and bank traders, this is where they've set their buy orders. So I want to be with them, right? If you cannot control them, then be with them. Right? If you cannot defeat them, then join them. So we cannot defeat the hedge funds, the banks. We cannot defeat them. So the best thing to do is It is to be their friends. So we assume that, okay, since there was an aggressive rally in price on my previous move. So I'll just connect that move and extend my line. What do I mean by this line? I mean that from this level, this is where I expect to take my buy signals, because these banks and hedge funds, I believe they have placed their buy orders around this level. So this is where I want to buy. Okay. So this is where I want to buy. Right. This is where I want to buy. Right. This is where I want to buy. You buy where you buy at demand zone and you sell on what, on supply zone. Right. Once you see a supply zone, when a coin it reaches your supply zone, what do? You are looking for what, for short signals. Right. This is where you want to what. This is where you want to what, to take short entries. So when your coin touches your what, your supply zone. When you say our coin is respecting our what, our supply zone, what do we mean? We mean that from this level there might be a probability of this coin is beginning a new trend, which is now what, a downtrend, right? Then also when it comes to demand zone, what do you mean when you say a coin is respecting your what, your demand zone? Mean that from this level there's a high probability that this coin must start what, shifting in direction to being an uptrend, right? So in this case, that means what, this coin was going down, right? Then we had a what, an aggressive pump, right? Then the market came back to your what, to your zone. So when it comes back to this zone, this is where you want to what, you want to buy, because you believe that these high market influencers, they have placed their orders around this level. Okay, so this area. So now, how to set your what? How to set stop losses? Right. That's the major question that people ask. How to set? How do I set my? How do I set my what? My stop loss and my target? Right. Okay. We've already talked about what, about your target. You take your what? You take your buy entry from the demand zone. Then the supply zone will be what? It will be your target. You take your short entry from the supply zone. Then your demand zone will be your what? Your target. So how do I set my stop losses? Let's say in this case, it is a what, a supply zone, right? So you will take your entry. Let's say maybe you take your entry somewhere around is it 0.1, okay, whatever you take your what, to take your entry there. So your stop loss, what would be your stop loss? Your stop loss, it can be at the what, the price of what, of your what, of your resistance zone, right, of your resistance zone, or somewhere somewhere near your zone. So you just, in a supply zone, it must be what, it must be slightly above your what, slightly above your zone, right, to give your what, to give your trade some space, because you find that this trade it traces for what, for a short period of time, then start going down to what, to a direction. So for you to be safe, right, just set what, your stop loss slightly near what, near your what, your what, your supply zone. So it will be where, to be slightly way above your supply zone. Okay. Same thing applies on what. Okay. So in this case, on our supply zone, maybe you can set your what. You can set your stop loss around this level, right? So again, also on what, on what, on the demand zones, right? On the demand zones, where do I set my what? Where do I set my target profit, right? Where do I set my target profit? Okay, just want to remove this a little bit. Just give me 2 minutes. Okay, let me leave it. Let me leave it like this. So in this case, okay, on the demand zone, where do you want to set your what? Your stop loss. What you've taken your what, your buy entry. So where do you set your what? Your stop loss. Okay, you just set your stop loss slightly below your what, your zone. That means somewhere around here you set your what, you set your stop loss. Right, you set the stop loss. And again guys, there's nothing wrong with the coin hitting your stop loss, right? The market is always volatile, right? Even if it hits the stop loss, guys, you don't have to blame yourself that I could have not set a stop loss here. My stop loss was too close. No, guys, there's no problem with that. As long as you lose less than 5% in a trade, uh, I think it's a good approach, right? Because you can even take 10 trades, 15 trades per day, as long as as long as your risk reward ratio makes sense. Okay, makes sense. So I won't tell you how to set your risk reward ratio. That's for you to do. Okay, I will discuss it with the rest of the team. Okay, so okay, let's continue then. So how to draw these demand zones. Okay, I've already talked about the demand zones, but I wrote some notes here. You can take a screenshot or you can just keep the video. Okay, how to draw demand zone, right? So on your left, right, like what I've said, right, on your left, look for the strong rallying price after consolidation. So you're looking for for the strong rallying price where there was a strong rallying price, right? For example, let me just try to make a let's say the market is was going down, right? Then you have something like a consolidation, right? Then a strong rallying price. So now when the market is like this, right, there's nothing you can do, right? Just don't do anything. What you do is just what you want to wait for this market to actually come back to your zone area. Then this is where you want to take your entry and buy. So this means that this level, right, this level, okay, I don't know what has happened here. Okay, let me start afresh, right? Say it's something like this. The market is consolidating, right? Then boom, it starts shooting up, right? So as for you, there's nothing you can do right here. So what you do, you just draw you draw your zone, right? Just draw your zone here. You extend it, right? So meaning you're expecting this coin to actually come back to come back to your zone, right? Then you take your buy signal, then you expect this coin to start shooting up, right? So okay, draw your zone and extend it. By doing this, you actually mean that you are waiting for the market to come back to your demand zone. And number three, when the coin is your demand zone, right? There are two ways you can buy, right? You can just buy a limit order that okay. And so maybe I want to buy around this level, maybe at 0.3598. So that's up to you. But also B, buy afterward after seeing reversal patterns. So there are different types of reversal patterns. You've got the double top, the double bottom, the pin bars and stuff. Okay, so there are many reversal patterns that you can use to take your buy entry. So that will be up to you. That okay. As for me, I think this will work for me or this will not work for me. So that is up to you as well. Okay, so I've just shown you how to draw your demand zone. So in this case, I've shown you to draw the drop base rally, right? The drop base rally, right? Okay, I've shown you to draw the drop base rally. So we've got different types of zones, right? When the market is there was a strong drop in price, then consolidation, then it starts shooting up. We call that one a drop base rally, right? So this is a drop base rally. You wait for the market to come back to this level, then you start shooting, you start buying from this level, right? Uh, Number two, we've got the rally base rally, right? The market it shoots up, consolidate, and continues shooting up, right? So what you do is that when the market is already up, right? When the market you open your trade, you find that this coin is already up. You just wait for the market to come back to your zone, right? To your zone. Then that's where you want to take your buy entry. You can buy a limit order. You can buy after seeing reversal patterns. That will be up to you. That will be up to you. Okay, guys, let me just open this time for questions. We will have another video after I've asked questions based on this. Okay, thank you so much.